Hi guys, we're going to start in commodities and swing into interest rates and currencies and then finish with stocks, as it's also a bit of an interesting night overnight as the US sort of market sentiment turns sour, consumer sentiment turns sour as we get closer to that recession, but that's sort of starting to be priced in, and it's sort of happening at the back end really. But over in the commodities, I've seen this sort of triple bottom here and a bit of a spike higher, which is kind of interesting because copper's off, iron ore's off, oil going nowhere, which is energy's the larger part of the commodity index. Gold not really going anywhere, although crypto took off last night as that sort of risk environment, I guess, starting to. It's kind of funny because the stocks are sort of rallying, but so is crypto. Anyway, wheat is also off, but natural gas, as the European winter starts to sort of get closer, had a bit of a spike. So this is supporting the commodity currencies such as the Aussie and the CAD and the Kiwi as well. They outperformed overnight. UK seems to be de-risking their pension issues. But they've still obviously got to battle inflation. But more interestingly, the US, I think, are starting to see that peak in interest rates. And if we look at the dot plot on the US Fed, we can see that the US Fed is suggesting that interest rates are going to peak at around 4.75% early next year, before then falling to throughout the next year and lower. But the market is pricing in peaking this year, December, and then in the first quarter of next year starting to move interest rates lower. And so they've got a more aggressive dovish trajectory than the US Fed. So I think that's what we're seeing, and we're seeing that sort of play out in the US dollar as well, as we a bit of an off day for the US dollar. Safe haven flow is not necessary as stocks rally, and we've got that interest rate sort of potentially peaking in the US. It's still in an uptrend technically until it breaks that, and then if it does, you've got a lower low, price comes down here, and you've got a lower high. So that's the purest definition of a downtrend. Over in euro, the opposite's happening obviously. If you get a higher high here on this run, then you've got a higher low. That's the purest definition of an uptrend, and the market's very close to producing that, and it's also very close to doing that on the pound as well. So interestingly, that these long-term trends that we're seeing on the euro, seeing on the dollar index, are starting to swing the other way and become a bear market on the US dollar and become a bull market on the euro. So it's all happening really. Aussie dollar supported by commodity currencies, and the only really reason you want to be buying Aussie, looking to track back towards this level here around the 65.50 mark. Dollar yen, there's no more BOJ intervention, but they'd be happy that the yen's a little bit stronger on the over there, and dollar Swiss, dollar CAD also a little bit stronger too. Moving into stocks, and we can see that Nasdaq had a pretty good day, but then after market, Amazon and I think it was Google also reported post market. Was it Amazon and Google? Let me just double check that. But yeah, something certainly is afoot in the bond land. Microsoft and Google, poor earnings are weighing on the Nasdaq, but the bigger index, the 500, clearly making higher highs now and higher lows. So don't know if it'll break that, but that's where it's heading. So that's about it, guys. Aussie inflation today, and what else is out? ECB, that's tomorrow. But today, Aussie inflation tonight, Bank of Canada, and tomorrow is the ECB. All the best with it.